Hey, this is Trader Travis, and I welcome you back to part two of my bear market blueprint case study, where I will be personally walking everybody through the bear market, showing you real money and real life trade, showing you how an experienced investor kind of manages the turmoil of a bear market. But first, a quick introduction for those who don't know who I am. My name is Travis Wilkerson. I am the 2019 US Investing Champion for the futures and options division, but I go by Trader Travis online. Now, I am coming alongside my partner of the Options Wealth Academy, Peter. He's the head trainer of the program that used to be called the Success Academy. It was my highest end training program and the most popular. Peter was promoted to head trainer last year, and so now he runs that, and I'm in the background as an on-call trainer. So I'm coming alongside him. He's already walking everybody through each week. He's giving mindset lessons, sharing, hey, here's what he's struggling with. Here's what trades he's making. He's doing case studies showing people how to grow 5 grand to 50 grand. And also for the higher level of the program, he's showing people how to manage 6 and 7 figure accounts. So I am not duplicating, I'm not trying to duplicate what's already taught inside of that program. But what I do want to do is come alongside him and give some free content, because I know not everybody's invested in education. Not everybody's fortunate enough to be able to afford the program, which is significant discount this year because we just rebranded it to the Options Wealth Academy. So everybody gets $2,000 off. But still, I know not everybody's fortunate enough to be able to afford it. And so I want to show people real world results. And so if you saw the first video in this case study, you saw a series of trades I placed that model what's taught in those programs. And I'm covering several different strategies and several different approaches. And so if you haven't watched that video, I highly encourage you to go back and watch that. I'm trying to keep all these videos anywhere between 10 to 20 minutes. And so you can get through them within a week. And so what I'm going to do today is update you on those trades. I'm just going to place the trades and then manage them along the way so you can see their performance along the way. And just to be super clear, this is usually reserved for members of our paid communities, right? Because when members join our communities, they not only learn our successful blueprints, but we model them in real time. But since we're in a bear market, I have a personal commitment to walk everybody through a bear market. So, because people are scared, people are terrified, people don't know how to handle bear markets. So I want to bear market. So I want to do everything in my power to make sure I help people. So if you're a member of our programs and you feel I'm giving too much, right, and it's not fair to you since you invested in your education, just let me know and I'll scale back, because I don't want to do anything unfair to you since you stepped up, you invested in your education. But just know, as always, you get, the top tier of all education, right? You know how to truly piece it together, and we're in the members area for full support. If you ever have any questions, you can ask us in the members area. But I do want to, since these are trying times, I want to do my best to help people suffering, right, who aren't fortunate enough to have these wealth building skills. So I hope you understand. Second admin note here is that this may not help you with the portfolio you already have, right? You're already managing, meaning if you already lost 10 to 20% of your account, I'm not sure how much this will help, but you can, at least see the mindset I'm approaching my portfolio in the middle of a bear market, whether I'm fearful, the tactics, how I shift things. So you can use that to help you moving forward. But I'm not a fixer. I've never been really a good fixer. Like if your portfolio is already broken or lost a lot, I mean, sometimes when you try to fix it, you make things worse. And so sometimes it's best to just start from square one and say, hey, let me make better decisions moving forward. Let me make a few tweaks moving forward so that my portfolio won't lose as much in the future, or won't lose any more money in the future. And you can use definitely what I'm sharing in this case study to help your portfolio grow after the bear market. Because during the bear market, our goal is not to make money, right? It's counterintuitive. Their goal is to lose less than the S&P 500 or break even at worst, right? Or our goal is to lose less than the S&P, or best case break even. That's a better way of saying it. So true goal is never to make money. People think I want to make money. No, it's just to lose less. So if the market loses 20%, you maybe want to lose 10%, right? So you beat the performance by the S&P by a factor of 2, if you look at it that way. And then best case scenario, you break even. You don't lose anything, which if you told anybody the market fell 50%, you didn't lose anything, they would be like, how did you do that, right? Hey, you can tell them. options. I learned from this crazy guy. He's not all well polished and professional hedge fund Wall Street credentials, but he's a guy who grew up American poor, and I figured out some things. I learned how to close the income gap. I had to become an expert at closing income gaps. So where I was American poor to where I wanted to be rich was a huge gap. So I had to become an expert at closing those gaps, and I had to do it in such a way that normal people like I, because I don't have family members who are rich, I didn't learn what the word investing meant until I was 20. Like, I'm not talking about learning about like how to invest. Like, I had no concept of the word. I had never heard of it before. And so I didn't learn it until I was 20, and so I had a long way to go. But I did find a way for average people like myself with no credentials and, rich people in my back pocket, really didn't have much of a leg up aside from being born in a country that's based on capitalism, right? And so, but anyway, enough of that. Let me get to it. All right, so you saw what the portfolio looked like the day I entered it. So this is about a week later. And the main thing I want to show you here is that I did, in fact, go ahead and buy my stock shares. I had to buy them a day later. And the first portion of today's training, I want to highlight the covered call strategy. It's also called renting out stock shares. You can buy homes and rent them out. A lot of people don't know you can actually rent out stock shares for monthly income. It's called covered calls, but I like to look at it like buying a rental house and renting it out. So I bought these 100 shares of stock here. Not all stocks have options to trade, but most do. And so I bought this stock for $376 a share, roughly, times 100 shares. So about $37,000. Think of it like buying a $37,000 home and then renting it out. So if you bought a house that costs $37,000, how much do you think you can rent that house out for? Well, I rented that house out for $415, but not for a month. This was only a 1 week trade. So I brought in income of $415 for the week, right? And so if I could, do that 4 times a month, which usually you can't, but theoretically, hypothetically, I could make 1,600, right? But that $400, what we do is take 415. Actually, what we can do is take $4.15. All option contracts need to multiply by 100. So when I rented out my stock shares, my 100 stock shares, I brought in $415. But we take that premium I received for the covered call and we divide it by how much I bought the stock for. That covered call premium brought in 1.1% of my money in a week's time. So I don't have to wait 2% for a measly dividend. I can trade covered calls, and this was the oldest actually and most widely used option strategy, is what a lot of retirees do for instant income. This is how they can live off their portfolio. So I brought in 1% return for a week. Again, dividends sometimes are 2% for the year. I just brought in 1% for the week. Now, that's how it's promoted. It's instant cash, which is all true. It's guaranteed income. I don't give it back. The moment I click the buttons, the cash shows up in my account. I can pull it out T+1, trade day +1. The next day, that $415 could be withdrawn from my account. It is mine to keep. Now, that is the positives, the returns. You can average, it averages out to about 2 to 3% a month for your covered call income you can bring in, 2 to 3% based on however much you invest. In this particular example, I invested $37,000. Now, there are some downfalls, which is why I'm showing you the screenshot. The downfalls of covered calls, which a lot of people like to gloss over, is that I bought the stock for $376. I sold a $377 covered call that obligates me to have to sell my stock for $377, which I'm okay with. It's higher than I bought it for, but I'm still obligated. Now, the downfall is, what if the stock goes past $377? It goes up to like, I don't know, $388, right? I don't participate in anything past $377. Why? Because I sold a call that obligates me to sell it at $377. I'm saying I'm okay selling this. Yes, I got some premium in exchange for that, but the downfall is I miss out on any upside movement past $377. That is the downfall of covered calls a lot of people gloss over. Lucky for me, I found a way around that we teach in the higher levels of the Options Wealth Academy. It's One Stock Blueprint. It teaches us how we can get that growth, right, and the income. So we get the growth. If we had the stock right here, we would have, if I just bought and held the stock, buy and hold profit would have been $1,200 for this 1 week's trade. But because I sold a cover call, my profit was capped at 400, and you can see here that cover call was showing a loss, right? Because it's showing, hey, I don't lose money. I'm not giving back to 415, but it's just the broker is showing, hey, Travis, you don't participate in anything past 377, and this is the money. Look at it as the money you're missing out on. It's not a cover call loss. It's just showing you the money you're missing out on, about $762. So I've actually run case studies side by side, buy and hold plus cover calls. Here's a secret. It's a very hidden secret. Buy and hold makes more than cover calls, right? Most people don't know that because they never ran case studies side by side. But yep, buy and hold actually makes more money overall than cover calls. So in that sense, it's better than cover calls. But with buy and hold, how do you extract this $1,200? It's just sitting there. And the only way for me to get it is to sell my stock, which people don't want to do, right? So the trade-off is, well, we can limit some of our growth in exchange for guaranteed income each month. So that's cover calls. So this was showing this option was expiring this day, which meant that I was going to get assigned, which means that, hey, the broker was going to take my shares away from me for $377. And let me show you that on the next screen. All right, you see down here, roughly a week later, my option got assigned. I went in and sold my stock for $37,700. But remember, I only invested about 36 grand buying the stock. So I kept my $400 cover call profit and made a tiny bit profit on the stock. And let me show you that on Excel. Sometimes it's easier to teach on Excel. So here are all the trades just broken out in the Excel so you can see it a little better. So I bought insurance for the stock that was covered in video 1. We bought the stock for $37,672. Sold my cover call for a guaranteed instant income of $415. Then my option got assigned. I had to sell the stock again. I made a small profit on the stock, a tiny bit. And then what I usually do with this strategy is I rinse and repeat. I turn around, buy the stock again, sell another cover call. But this time, I want to do something different. People are all hyped up. I'm seeing all this hype online about the options wheel strategy. It's a really simple strategy, and people do it all wrong. But I'm going to show you my version, right? It's an enhanced wheel strategy. Like buy insurance for it. People like don't buy insurance for it, and then they chase all these stocks with high premiums, and then they lose a lot of money. I just looked at someone's performance with the wheel strategy, and they had like a 80% drawdown, meaning that they lost 80% of their account value. I'm like, that's ridiculous. So anyway, I'm going to show you my version. So instead of just turning around, buying the stock and selling another cover call, I just sold a put, and that's what the wheel strategy is. What you wind up doing is you sell puts. This is a strategy that Warren Buffett, or one of the world's richest investors, a billionaire, he uses options. People don't know that. He sells puts, right? So when you sell a put, you're getting paid to buy a stock you want to own. In this particular case, I got paid $135 to say, hey, I want to buy the stock at $375. Now, I keep doing this, right? I only get assigned if the stock falls to that level, and then I'm forced to buy the stock, which I wanted to do anyway, right? I just got paid to do it on the front end. So then if I'm assigned, I have to buy the stock at 375, 100 shares, right? Then I turn around and sell covered calls, right? Then I keep selling cover calls until what happens is what already happened to me. I get assigned, I sell my shares, my cover call gets assigned, I sell my shares, then I rinse and repeat. I start all over. I start the cycle all over again, selling another put. So all the wheel strategy is you alternate between selling puts and selling cover calls. That's it. You just go back and forth. It's really, honestly, I've done it side by side with my approach. Well, if you do the enhanced version, I usually do, where you buy insurance and you also pair it up with another strategy so you get the growth and an income. It all comes out to be the same, right? Cover calls and selling puts is the same. Actually, let me show you my broker account. And this is something I share with one-on-one clients. They were asking about the wheel strategy, and I'm like, don't get caught up in the hype. It's just literally marketing hype, because whether you sell cover calls or puts is exactly the same. The income, the risk reward is exactly the same. Listen to me when I tell you that. Now I'm going to show you. All right. So if we come here, we bought SPY trading at 380.65. So if we came and we bought the stock and then sold a 381 cover call, we will get $2.25 immediately in our account. That's our guaranteed income for one day. It's a one-day trade, right? So again, bought the stock for 380, sold at 381 to cover a call. So 225 is your guaranteed income. You would make a slight capital gain of about 40 cents. Let's jump over to the 381 put. What do you notice? What did I say was your capital gain over here? About 40 cents. What do you notice with the 381 put? If I sold the 381 put and the stock fell, I would have to buy the stock at 381, but I received 247 on the front end. What do you notice about the income I would bring in? The income is about the same whether I sell a 381 cover call or I sold a 381 put. My cost basis in the stock, the income I bring in, they're all about the same if you sell the same cover call and put. No matter if it was in the money or out of the money, the transaction comes to be the same. Okay, let's now move to out of the money, right? Same deal. If I bought the stock at 380.65 and I sold a 387 covered call, like my guaranteed income here now is only 45 cents. However, if the stock went up in price, I would earn, a capital gain, from where I bought it 380 to 387 of roughly $6, give or take, right? So max best case, I can get $6.45, give or take. Now let's jump over here to the put, and what do you see? $6.50, right? Very close to what I just talked about. So because this 387 put, it only has, and I don't have it in my broker account, let me change it over. This goes to option basics, intrinsic and extrinsic value, time value, real value, etc., etc. You look at a 387 put, it only has 83 cents of time value built into it. And the reason you get such a high premium is because you're selling the intrinsic or real value that put has. So again, whether you sell puts or cover calls, literally it's marketing hype. The wheel strategy is no different than a traditional standard cover call strategy. As far as income wise, cost basis, profit and loss, all of that. But it does have some pros and cons, meaning that, let's come back to the Excel here. If the benefit here is I didn't have to tie up another 36,000 buying the stock. I could just keep my money in cash, selling the puts, bringing in premiums. My money can stay in cash until I'm assigned. And then it also gives me flexibility. Like if the stock dropped to 375, I can control when I buy the stock, and I can employ a strategy called rolling. Now, rolling is something members learn in the put ladder course where you can roll puts, you can adjust puts to a different price level. Just keep adjusting it based on what the market does. Now, just check the time. Again, I want to keep all these videos between 10 to 20 minutes. But I just want to give you an update here on what's going on. This is 1 week later. The management I had on these trades, see the covered call trade, was pretty much so far as profitable. So that is it, my friend. I will wrap up this video, and I will see you in the next bear market case study video. I will put the links to all of our training programs below. If you're a member of our program, you have any questions, just post them in the members area, and Peter or I will get back to you within 24 to 48 hours. You take care. I hope this is adding some value to your life. I hope this is inspiring you and showing you that you don't have to fear bear markets, right? I ask people how they like me to help them during the bear market, and actually I probably will do part 2.5, right? The next video I may cover some of the responses I received, because one person was talking about mindset. They had never been through a bear market. They wanted to know how veteran traders like me handle bear markets. What are we thinking about and things like that. And I was like, hey, you know what? That's a good point. So I'll probably cover that portion of that in the next video, or maybe add in a bonus video for you. So you take care. See you in the next video. Bye-bye.